We will start with individual taxation. Okay, so we need to learn how the individuals will pay the tax. So first of all, we need to know that what are the sources from which the individual can earn the income. So we have got three sources. The first one is non-saving income. Second one is saving income, and the third one is dividend income. Okay, so individual can earn from three sources of income: non-saving income, saving income, and dividend income. Now let us first start with dividend income, which is the easiest one. Now, if you have got shares of a company, so we all know that on those shares you will be receiving dividend from the company. So that is basically your dividend income. Then now let us talk about saving income. Saving income means your interest income. Okay, like let's say I have deposited some money in bank account. Now whatever interest I will receive on that deposit, that is your interest income. Okay, now the last one is non-saving income. Now under the non-saving income, we have got employment income, then we have rental income, then we have profit from partnership, pension income, then profit from sole proprietorship. Now employment income, that means like let's say if you're doing a job somewhere, so you obviously against that job you will be receiving some salary, you will be receiving some bonuses. Okay, so you'll be receiving some kinds of benefits like car benefit, wind benefit, fuel benefit. So all these things are collectively known as your employment income. Okay, so employment income will not only include your salary, but it will also include all of the benefits that you will receive against that job, like your car benefit, fuel benefit, wind benefit. Okay, so all these things are collectively known as your employment income. Now, rental income. Now, let's suppose I have a property and I have given that property on rent. So, whatever rentals that property will generate, that is basically your rental income. Then profits from partnership. I don't think that it needs any explanation. Like if you have, if you're doing some partnership business, so against that, whatever share profit you're receiving, that is basically your profit from partnership. Now pension income. Now what is pension income, that we will see later on. Okay, but right now for the time being, you have to remember that pension income that will come under the non-saving income. Now the last one is profit from sole tradership. Okay, so if you are doing your own business, so whatever profit you're earning against that business, that will also come under the non-saving income. So all these income, they will come under the non-saving income. Okay, so we have got three sources of income. Non-saving. Now in non-saving, all these income will come, like your employment income, your rental income, profits from partnership, pension income, and sole traders. Then we have got saving income. Saving income means your interest income. And then finally we have got dividend income. Now the question is why they have categorized them into three different income. That is what you must be wondering, that why they have categorized them into three sources of income. Now that is because of the tax rates. The tax rates are different for non-saving income, for saving income, and dividend income. Okay, so the tax rates are different. So that is why they have categorized them into three categories. So now the question is, what are the tax rates? So these are the tax rates. Now these tax rates are given in exam. Okay, so we are studying the tax rates for the tax year of 1920. Okay, so this is the table. Okay, now over here we have got three slabs. The first one is basic rate band, second one is higher rate band, and the third one is additional rate band. Now these are the tax rates for non-saving income. So if your non-saving income, that is between £1 till 37,500, so you will pay the tax at the rate of 20%. And if your income, that is between 37,500 until 150,000, then you will pay tax at the rate of 40%. And if it is 150,000 and above, then you will pay tax at the rate of 45%. Okay, now do remember one thing, that over here there is no concept of direct taxation. Okay, like let's say if an individual is earning an income of 160,000, so it doesn't mean that on all of his income he will be paying tax at the rate of 45%. No. Okay, so basically he will pay tax according to the basic rate band first, then higher rate band, and then the addition rate band. Okay, so if his income is let's say 160,000, so it doesn't mean that on all of his income he will pay 45% tax. Okay, so from till 37,500 he will pay 20% tax. Then till 150,000 he will be paying 40% tax, and whatever income is in excess of 150,000, on that he will be paying tax at the rate of 45%. Now it will become more clear when we will look at the calculation. So these are the tax rate for non-saving. Now for saving income, again for saving income we have the basic rate band that will start from uh, £1 till 37,500, and you will be paying 20% tax. Then we have higher rate band which starts from 37,500 until 150,000, on which you will be paying 40% tax. Then we have additional rate band which is 150,001 and above, on which you will pay 45% tax. Now you must be wondering that, oh, since the tax rates are same for non-saving and saving income, so why they have categorized them? Why? So there's a reason behind this that will become clear when we're studying saving income. Okay, now for dividend income, the tax rates are completely different. If you fall in basic rate band, then you have to pay the tax at 7.5%. Then it is 32.5%, and then 38.1%. So right now I will be focusing on saving income. So just focus on this area. Okay, so right now we are learning how to apply tax on saving income. Then later on we will learn how to apply tax on saving income. Then for dividend income. We have an example question which says Mr. X earns employment income of 60,000. Now we are required to compute income tax liability. So he is earning employment income. So first of all, this employment income, that is a non-saving income. Okay, that will come under non-saving, right? Okay, so he is earning an income of 60,000, which is a non-saving income. So employment income is 60,000. Now Mr. X will not pay tax on this entire 60,000. On this income, he will be receiving a personal allowance. Now for the tax year of 1920, personal allowance is £12,500. Okay, so for 1920 tax year, personal allowance is £12,500. Now the question is, what is personal allowance? So personal allowance, that is a part of an income which is tax exempt. Okay, it is a part of your income which is tax exempt. Tax exempt means that on that income, on that part of your income, you don't have to pay any tax. So if Mr. X is earning an income of 60,000, so out of this, on 12,500 he will not pay any tax. Okay, but on the excess amount, he is required to pay the tax. Okay, so on 12,500 he will not pay any tax, but on the income which is in excess of 60,000, on that income he is required to pay the tax. So from your income you will minus the personal allowance. Now whatever income is left, that will be termed as your taxable income. Okay, taxable income means an income on which you have to pay the tax. So 60,000 minus 12,500, that will be 47,500. Now on this income you have to pay the tax. So let us compute the tax liability. Now let me write down the bends again over here. So basic rate bend, that starts from £1 till 37,500. And for non-saving, the tax rate is 20%. Then your higher rate bend, that will start from 37,501 till 150,000, which is 40%. Then additional rate bend, that is 150,001 and above. So you will be paying 45% tax. So right now, his taxable income is 47,500. So it means he will be falling in the higher rate band, right? He will fall in this band, right? Because his income, that is between 37,500 and 150,000. So he will fall in the higher rate band. But I told you that you will not directly go and apply 40% tax. You have to use your bands. Okay, so first of all, you will be using your basic rate band. So basic rate band is till 37,500. So first of all, you will be using your basic rate band, which is till 37,500. So basic rate band, this is my non-saving income. So on 37,500, you will be paying tax at the rate of 20%. So that is going to be 7,500. So my taxable income, that was 47,500. Now out of this, you have applied tax on 37,500. So the remaining income on which you have to apply your tax, that is going to be 47,500 minus 37,500. So my remaining income on which you still have to apply the tax, that is going to be 10,000. Okay, now we don't have any space in basic rate band. That is fully utilized. Okay, this band is fully utilized. We don't have any further space over here. So now you will be moving towards the higher rate band because we don't have any space in basic rate band. Okay, so now next we will move towards the higher rate band. Now your higher rate band, that is from 37,500 till 150,000. So first of all, we need to calculate the limit for this band. We have to see that how much income can come in the higher rate band. So that is very simple. We have to calculate the limit. So just take the difference between 150,000 and 37,500. So 150,000 minus 37,500, that is going to be 112,500. This is the limit of higher rate band. It means that only this much income can come in higher rate band. Okay, so my remaining income is 10,000, right? And what is the limit of higher rate band? That is 112 to 500. So it means this 10,000, this can easily come in the higher rate band. Okay, so higher rate band, right? We don't have any space in basic rate band that is fully utilized. So that's why we are moving towards a higher rate band. So higher rate band, non-saving income. So remaining income is 10,000. So on this 10,000, we will pay tax at the rate of 40%, which is going to be 4,000. Okay, now the entire income is tax, right? We have applied tax on the entire income. So my income tax liability, that is going to be 7,500 plus 4,000, which will be 11,500. That is your liability in 11,500. So this is the tax which you are required to pay. Now let us take one more example. Let's say, for example, rental income is 90,000 pounds. Requirement is same. You have to calculate income tax liability. Okay, now rental income, that is again a non-saving income. Okay, that is your non-saving income. So rental income is 60,000. Now on this entire 60,000, you don't have to, sorry, that is 90,000, not 60,000. Now on this entire 90,000, you don't have to pay the tax. Remember, we will be receiving personal allowance. So personal allowance is 12,500. Okay, so on 12,500, you will not pay any tax. So from this income, you will minus your personal allowance. So now whatever income is remaining, that will be termed as your taxable income, which is going to be 77,500. Now on this income, you have to pay the tax. Okay, so let me again write down the bands. Basic rate band from pound 1 till 37,500. You have to pay 20% tax. Then higher rate band 37,500 till 150,000. You have to pay 40% tax. Then you have got additional rate band, which is 150,000 and above, 45% tax. So my taxable income is 77,500. So it means I have to go till the higher rate band, right? Because my income is more than 37,500, but it is less than 150,000. So you have to go till the higher rate band. Okay, so I have to go till here. But again, I cannot directly go and apply 40% tax. You have to utilize all your slabs. So we will be starting with basic rate band. So basic rate band, non-saving income. So in basic rate band, only 37,500 of your income can come. So on 37,500, you will pay tax at the rate of 20%, which is going to be 7,500. Okay, so my income is 77,500, out of which you have applied tax on 37,500. So your remaining income, that will be 77,500 minus 37,500. So remaining income on which you have to apply the tax, that is going to be 40,000. Okay, so still you have to apply tax on 40,000. Okay. Okay, now we don't have any space in basic rate band. That is fully utilized. Okay, we don't have any space over here. Okay, so now I will move towards the higher rate band. Now what was the limit of higher rate band? That was 112,500, right? So we have to apply tax on 40,000, and the limit of higher rate band is 112,500. So this 40,000, this can easily come in higher rate band. Okay, so higher rate band, non-saving income. So on this 40,000, you will pay tax at the rate of 40%, which is going to be 16,000. So we have applied tax on all of our income, right? So my income tax liability will be 16,000 plus 7,500. That will be 23,500.